Hello and welcome to the webinar, The Impact of E-invoicing on Businesses and Their Tax Compliance. My name is Michael with Argyle, and it's great to have everyone joining us today. I have a few administrative details to share with you, and then I'll turn things over to our esteemed speaker. First, we'd like to thank Avalara for their partnership with today's event. They've been a wonderful partner to Argyle and are committed to providing you with valuable content and a great overall experience. So thank you again to Avalara. We appreciate you joining us today. We welcome you to stay connected during today's event. For those of you who are active tweeters, please follow us on Twitter at Argyle Exec Forum, and also be sure to follow Argyle on LinkedIn for special announcements. I also want to take a moment to touch on our content neutrality policy, which we've curated based on the feedback we've received over the years from our members. We've worked closely with our speaking faculty to ensure that you receive a set of balanced and neutral viewpoints during the session today, and we appreciate our members' support of this policy. For those seeking CPE credit today, you must answer at least 3 polling questions and remain on the session for its duration. Polls can be found under the Polls tab on the right-hand side of your console next to Chat. Afterwards, if you are eligible to receive credit, you will receive an email with a link to your certificates. If you have any questions on credits, please email cpe@argyleforum.com. Finally, and most importantly, we want to hear from you. So please submit all questions that come up during today's event into the chat section of the interface. Following the discussion, we've set a time for our speaker to weigh in on your questions. Now, before we begin our discussion, I'd like to introduce our speaker, Alex Balfe, Senior Director, Global Indirect Tax with Avalara. Alex, thank you so much for being here today. Welcome, and over to you.
Thank you very much, Michael, and good morning, everyone. It's an absolute pleasure to be with you today. Yes, just by way of background, my name is Alex Balfe. I'm a Senior Director for Global Indirect Tax with Avalara. I have over 17 years experience within global indirect tax, so working within international VAT, GST, and sales tax, predominantly in the UK and Europe. I have spent time in the US out of Chicago in a global VAT role. I've been involved across tax technology, e-invoicing, as well as consulting, providing advice to enterprise level businesses, all the way down to dynamic startups. I was previously with Grant Thornton and Deloitte, and I've worked on some very large tax transformation projects around the globe. Today at Avalara, my role is to advise the business on changes that are happening across the globe, and in particular in relation to e-invoicing, making sure that our solutions are compliant with new regulations. I'm also a member of a number of committees and working groups across the globe in relation to e-invoicing. Most recently, I've joined the European Commission's e-invoicing technical advisory group, so working with the European Commission to advise on changes and updates to e-invoicing within the EU. I also represent Avalara at Open PEPL and ESPA, which is the European E-invoicing Service Provider Association. So in terms of today's session, I'm going to provide an overview of the mandate timeline. So basically a snapshot of e-invoicing across the globe. Who's introduced e-invoicing and when, what's happening next year and in the next 2 to 3 years, and starting to look at some of the key trends. I'm then going to talk about why tax becomes way more important under e-invoicing, and I've got a couple of case studies there to illustrate that. I'm then going to talk about the concept of a continuous indirect tax compliance lifecycle. And it really does become a cycle, and move away from, I suppose, the more traditional linear approach to tax. I'm then going to talk about tax and compliance processes aligning together, so no longer a parallel process, and the benefits that that will bring to businesses. I'm then going to talk about VAT in the digital age. So this is a big initiative within the European Union, and actually was only announced last week on Thursday by the European Commission. So this is still very fresh, almost breaking news. But I wanted to include it in our discussion today because it's very interesting. It will show the direction of travel for e-invoicing within Europe over the next 5 years, and hopefully show some insights about the key trends and why e-invoicing is going to really multiply even quicker than it is now. Then I'm going to look at the future of e-invoicing. So what are the key trends, themes? What do we see as the future? What will be adopted by countries? What are the key trends? And then finally, looking at opportunities for the tax function. So, what does this increased automation through the use of e-invoicing, this increased data lead to? What are the benefits for the function and for people themselves? Of course, I'm more than happy to take questions. We've got time at the end for a Q&A, but please, do use the chat, and I'll try and respond as soon as I can. So very, very quickly, and this is not a sales pitch, just a bit of background about Avalara. If you haven't heard about us, we are probably the largest tax technology company in the globe. Founded in 2004, headquartered in Seattle in the US, but today very much an international company. We have cloud-based tax automation solutions, solutions that cover 193 countries. We have over 30,000 companies that we support globally. Our focus is on helping our customers achieve compliance, reduce their risk, and streamline process. And in terms of the products and services we offer, the whole indirect tax lifecycle, from obtaining registrations, classifying goods and services for indirect tax purposes, calculating and determining the correct tax at the point of sale, at the point of importation, as well as producing compliance invoices and e-invoices, the subject of today's presentation. And then finally, we have technology to file VAT, GST, sales tax returns, both in terms of SaaS solutions, but also as a managed service to customers too. And today a lot of that is digital filings, kind of transactional level reporting, which is a key trend that we're seeing together with e-invoicing. So I wanted to briefly touch upon the timeline. So if you look at the first column here, it's the last decade. And the real trend here is it's basically Latin America, South America has taken the lead on e-invoicing. The tax authorities there have actually been years ahead of the rest of the globe. And Brazil has had mandatory e-invoicing for over a decade now, over 10 years, swiftly followed by Argentina, Colombia, Mexico, Peru, Chile. Most of the continent and region is now covered by e-invoicing mandate. It's just business as usual. And what does that mean? Well, it means businesses need to raise invoices using structured data, meeting local, national format standards, signatures, issue that invoice via a government or tax authority run platform, and that platform will approve the invoice. In effect, provide the green light for that invoice to then be sent on to the customer. And that becomes, in effect, the single source of truth for tax. And it's starting to replace tax returns. And in fact, in Chile, the Chilean tax authorities will pre-populate the return based on that invoice data they receive. And if you look at that first column, where there are European countries, really that it's only for public procurement, for business to government, or invoicing's been brought in on a voluntary basis. The only exception there is Italy. So Italy became the first EU member state to mandate e-invoicing back in January 2019. And if we look at this year, we've started to see that spread. So Italy has extended the scope. So as well as mandating all businesses now, regardless of size, to issue e-invoices to businesses and consumers in Italy, there is now, since July this year, a requirement to report invoice data for all cross-border invoices. Why is that important? Well, if you're a US corporation, you have a customer in Italy or a subsidiary, affiliate entity in Italy, and you raise an invoice to that entity, that data will now be reported to the Italian tax authority periodically, every month. So suddenly there's visibility, and the tax authority have visibility on all transactions now in real time in terms of domestic transactions, and then periodically on the purchase side and on the cross-border side. We've also seen a number of countries launch pilot programs, launch e-invoicing platforms. So, for example, Romania, their e-factura platform, as well as Poland, which has launched its KSEF e-invoicing platform. Looking ahead, next year we will see e-invoicing spread more and further across the globe. In the Middle East, the Kingdom of Saudi Arabia, KSA, will move forward with its phase 2 of its mandatory e-invoicing program. And that phase 2 means that all businesses will need to connect their invoicing software to the government, to the tax authority. And that means, data will be shared. We will see e-invoicing being mandated in Serbia, as well as promoted in Australia, Japan, and Singapore. 2024 is the big year where we will see France, Spain, and Poland all mandate e-invoicing for business-to-business supplies. So in France alone, there are 4 million businesses that in little over 18 months' time will need to be in a position to receive electronic invoices from their vendors. And then, looking further ahead, there will be a number of European countries hot on the heels. So there's already been announcements from Slovakia, Romania, Belgium, Sweden, countries that are planning to introduce e-invoicing. They're just waiting to define the requirements and pass the actual legislation. And I've also put up there the EU's VAT in the digital age. I'm going to talk about that in more detail. But what you will hear is a lot of the barriers for e-invoicing will be removed, as well as some very new pan-European e-invoicing and digital reporting requirements that will affect about 20 million businesses within the EU. So the indirect tax compliance model is changing. And I call this the traditional model because historically, businesses have been able to simply raise an invoice in any format they want. Some still print a paper invoice, they mail it out. Others will create an invoice as a standard PDF, no structured data, maybe attach that to an email, send it to a customer, just using email, and that will be received in a manual way. The supplier, the vendor, chooses the VAT liability, the tax liability. That may be challenged in the future. It may not. They prepare a periodic tax return, maybe every month, maybe every quarter. In some jurisdictions, annually. There may be an audit. That audit could be in person. It could be every year, every 2 or 3 years. And that audit may even just be on a sample of data, or in some countries, including the UK, just looking through records, looking through some sample invoices, looking through some spreadsheets, looking at some bank statements, maybe doing a little bit of reconciliation. But that model, that linear model, that idea that the tax authorities look at a sample basis, that is completely changing. In the future, we will see continuous transaction controls, which means the tax authorities around the globe are involved in monitoring, checking, validating transactional and tax information in real time. And that's really going to change the way tax authorities audit businesses too. Because under what we call a clearance model or a pre-clearance model, tax authorities will receive an invoice and they will run checks and validate that invoice. They will carry out checks on the supplier, the customer, in some cases, even the tax amount. And only then will they validate the invoice and give permission, the green light for that invoice to then flow to the counterparty. But that's really important because it means the tax authority have had visibility, but then they have that data. So they're doing real-time checks, but then they have this huge, vast, granular data set at a transactional level in real time. And every transaction, if it's not covered by e-invoicing, is likely to be covered by a parallel e-reporting requirement. And with that data, tax authorities are then able to run advanced data analytics, exception reportings, even deploy artificial intelligence and machine learning. In the background, tax authorities themselves have been going on their own finance transformation journey. They've been investing in the infrastructure, the technology, the servers, the analytical capabilities, as well as hiring staff with those skill sets. And e-invoicing is this new way to obtain that data, because the historic model of summary level data aggregated in boxes on a VAT return, it's too little, it's too late. So if there's fraud, if there are errors, often by the time it's picked up, it's too late. So why is tax more important under e-invoicing? Well, I've talked about this data that's shared. I've talked about it being in real time. But the tax authority can now see both sides of a transaction. They can compare them. They can contrast them. They will compare the sales invoice issued, reported, by a vendor, by a supplier, and they'll compare that with the purchase invoice received by the customer. They'll be able to compare the output VAT, so the tax on the sale, with the input VAT, the credit that the customer is trying to obtain. Because of course, in a VAT system, you're allowed to take an input tax credit on most purchases. There'll be reconciliations made by e-invoicing, any reporting. What's being reported by one party, what's reported by the counterparty. But they'll also be able to run checks on the documentation themselves, looking at the authenticity of the supplier, really eradicating any chance of fraud. So mandating the use of things like digital signatures. So the invoice that's issued by a company, it's guaranteed to be authentic. It can only be invoiced by that entity. And it's the same with the customer. And that may be evidenced by a unique tax number, tax ID, as well as other signatures. And I'm going to talk about this in a minute. That really drives the importance of good quality master data, because today it may not always drive an incorrect tax decision. It could do, but in the future under e-invoicing, it's critical. And the wrong bit of data could mean the invoice not only doesn't get approved by the government platform, but even if it does, it may not then be routed to the customer. Mismatches are no longer an option. The idea of having transposition errors, someone sitting in a shared service center or an AP department, manually typing in data from an invoice, inputting that into the ERP. Under e-invoicing, that's just not possible, because the entire idea is the invoice is machine readable. You are eradicating the need for manual data entry. And even if you did, want to duplicate that effort, the risk of human error is too high. You can't have errors. There needs to be 100% accuracy, because if it doesn't match to the counterparty's declaration and reporting, it will be flagged, and there could be penalties. There could be VAT deduction disallowed. Another example of something that is suddenly going to be very key under e-invoicing is exchange rates. So for VAT, of course, you can raise an invoice in any currency. US businesses may trade across the EU in US dollars, but the moment VAT is charged, or GST, the tax shown on the invoice needs to be shown in the local reporting currency. So, for example, euro within the Eurozone group of countries. At the moment, a lot of businesses will simply recalculate the VAT based on their own exchange rate, one that's loaded into their ERP system. But for VAT purposes, you're meant to use the same rates, the same amount shown on the invoice. Under e-invoicing, if a different rate's used and a different VAT amount is declared, they won't match. And that's when the tax authority will start questioning, querying, and even rejecting claims. So I wanted to look at a bit of a case study to highlight a lot of these trends and themes we're seeing. So Romania has launched the e-factura system. So they haven't mandated e-invoicing yet for all businesses. That will come. At the moment, this is mandatory for business to government. So anyone involved in Romania in public procurement, invoices need to be raised and issued via the system. So meeting local Romanian requirements, but also, being part of this new invoice flow. And the interesting thing about this system is the checks that it carries out. Compare this to the kind of business as usual for most businesses now. The old system where an invoice is just created, via the ERP, maybe via SAP, via Oracle, via NetSuite. The invoice is generated, it's then mailed out, it's then emailed out. There'll be some checks maybe built into the ERP, but then there's no visibility to the government. There's no checks until maybe later down the line in a very manual process. In real time now, every invoice that's issued on the system, there'll be checks made on the syntax, on the structure. There'll be semantic and logic checks. There'll be checks on the identity of the issuer, validating digital signatures. There'll be checks on the integrity of the invoice content. Does it meet all of the requirements for content on an invoice? Is everything in the right format? Has that invoice changed? The Romanian tax authority have said initially there'll be no VAT checks, but these will be added at a later date. So they're already starting to build checks on the tax treatment into the plan, into the system. And this is just Romania, but this is indicative of what we're seeing and we will see across Europe and across the globe. Just looking at a second case study now, and this is moving back to Latin America. And on my very first slide, I said these tax authorities, these countries have been ahead of the curve. They were really the first to look at digital tax, the idea of administrating tax, reducing fraud, reducing the VAT gap by technology, implementing mandatory e-invoicing, harvesting vast quantities of transactional data, and then using that to audit businesses. Well, those tax authorities are now taking this a step further. So last year, these tax authorities are grouped together in the CIAT, which is the regional association for the tax authorities. And the CIAT has actually recently signed a deal with Microsoft for Microsoft to build them a data center. And not just that, build them a center of excellence for AI. And so these tax authorities have this vast data. They have visibility on every transaction in their country. They have all this data, rich, insightful data. And they're now looking at ways they can use that. So find better ways to spot elaborate fraud, to look for errors, for looking for issues, possible inconsistencies, being able to compare trading partners, being able to compare different industries, different regions, different seasonal trends. And that's possible now with AI. And that's something that will learn and get better. And I think that's really interesting. And it's a great example of regional collaboration. And in fact, within the European Union, and something I'm going to talk about in a minute about VAT in the digital age, it's quite similar. They're not talking about AI yet, but they are creating a brand new pan-European database where tax authorities will submit data for all the transactions in their countries upwards to a super VAT information exchange system. And then they'll be able to look at that data, audit the data, and look for fraud. And I just wanted to share this quote from the OECD. I think this sums it up nicely about why this is the clear direction of travel, and the countries that haven't introduced e-invoicing yet, why they will. Because these solutions offer a win-win. So for the tax authorities, better detection of crime, higher revenue recovery, and synergies that can make tax compliance easier for business and tax administrations. And there's probably some people on the call now, having a wry laugh or smile, saying, well, does this really make it easier? There's heavy investment, there's big compliance requirements we need to meet. Meeting e-invoicing and digital reporting across the globe has been suggested to me, by a number of VPs. It's like playing whack-a-mole. These new requirements crop up across the globe, often with very short notice, and it's very difficult for businesses to look at that holistically, strategically, and address it in a scalable way. But really, every country that does this, the results are shining through. So, this is being approved at the highest level, the OECD, the IMF, the European Commission. We will see more collaboration between countries, between tax authorities. And, over the next four to 8 years, virtually every country in the world, will have e-invoicing. So what does this mean for businesses in terms of the kind of day-to-day compliance? Well, before I talked about that very historic legacy view of indirect tax compliance, the linear process, raising an invoice, preparing a tax return at the end of the period, the end of the month, the end of the quarter, waiting for an audit. Under e-invoicing, I'd suggest that this compliance cycle becomes continuous. It becomes real time. It's actually 24/7. So at the point of sale, getting that tax treatment correct is even more important, because there's less chance and ability and time to make voluntary disclosures now. The tax authority are aware of the tax that you've charged, or indeed haven't charged, before the customer even sees the invoice. It's the same on the invoice receipt. Suddenly you're receiving an invoice from a supplier which has granular detail. It's in structured data. So actually your systems should be able to process that for approval, for posting, for payment, for validation, again, in real time, a lot quicker than historic manual processes. And then, yes, there might still be compliance returns. They're not going away immediately. But what I think will happen is it will become more about validation, reconciliation. Tax authorities will start pre-populating the majority of the boxes on a VAT return, the different fields, based on the data they already have. And actually, you'll have to really prove if there's an error, because really you're saying the data that you submitted wasn't complete, wasn't accurate. So maybe it will be more augmenting that with some data that isn't caught by e-invoicing or e-reporting, maybe T&E, some other manual purchases from very SME businesses. So this becomes more of a data analytics, reconciliation, more of an automated process. Suddenly archiving becomes very, very important. And historically archiving, maybe we're talking about simply saving a PDF in a Dropbox, in a folder, maybe storing paper invoices in an archive, in a warehouse. Maybe those would be retrieved in the event of an audit, an internal audit, a question from a tax authority, a question from a supplier or customer. But under e-invoicing, because that electronic file becomes the single source of truth, there are suddenly more onerous requirements about how you store and archive that invoice. So typically within Europe, that e-invoice needs to be stored for a decade, 10 years. And there'll be very strict rules where that needs to be stored. So typically within the European Union, some countries will say you need to add a digital signature, timestamp that data that you're archiving away. In Italy, you even need to create a preservation manual to document how that data is stored, the controls you have in place. And then just from a practical point of view, a lot of these e-invoices are XML. They're in UBL or CII. They're not really human readable. So, you as a business will need to find a way of retrieving that document and turning it into something that's human readable. How can someone in an AP team, just another stakeholder within the business, be able to review that? So, that's a change to business as usual process. And this, most of these tasks are happening every day. It's no longer something that can just wait till the end of the period. I also think that in this new world of digitalization and e-invoicing, we will see tax processes and traditional finance business processes align. And what do I mean there? Well, I think historically, they're two separate things. Raising an invoice, posting documents, purchase orders, sales orders, that's more of the business and finance side. Yes, tax, may have inputted into the setup of the system. Yes, they may do some checks. But really tax became an end of period activity, parallel to the actual raising of the invoice. Suddenly under e-invoicing, it becomes the same thing because the submission to the tax authority is the submission of the e-invoice. It happens in real time, and therefore tax are involved in the entire business process. If it fails, the tests on the invoice about the authenticity, the integrity, the schema, the format, the signature, the tax, that invoice will not be sent. The customer won't receive it. The business won't be paid. So it suddenly becomes so critical. But there are huge benefits for this as well, because if this is right and it works, there should be a very, very good customer experience. The customer receives the invoice quicker. They're no longer waiting for it in the mail, in an inbox. There's the ability for the payment to be automated because we're receiving this in structured data. There are huge process benefits and huge cost savings, which I'm going to touch upon later. You could also say this is compliance in real time because there should be greater confidence in the quality of the tax, not only on invoices issued, but invoices received. And if there were errors, they should have been identified by the tax authority already. So, hopefully there are no surprises leading to penalties, interest, and assessments. There's also a reduction in costs in relation to, for example, printing, postage, archiving, as well as full-time employee costs and the hours they would spend doing very manual tasks. So it'd be interesting, what this looks like in the future in terms of shared services, in terms of the traditional AP department, because this is really transforming those roles. But there's also the ability to tax code transactions at a more granular level and in a more automated fashion. So e-invoices normally have the ability to add tax codes. Some countries mandate specific tax references on the invoices. This really will help with automation and automated posting. I'm now going to look at the future of e-invoicing and some of the key trends that I'm seeing. PEPL. So if you haven't heard about PEPL, I'm sure you will soon. So PEPL started off as a pan-European public procurement exercise when the EU looked to automate invoicing within public procurement. They created an invoicing standard and they built a European e-invoicing network. And this allows businesses to share documents with governments in a standard format. And in return, that normally leads to quicker payment times. Well, PEPL is no longer just European, it's expanding. Australia, New Zealand, Singapore have all recently adopted PEPL. Not mandating it yet, but really recommending it to businesses, offering incentives. So in Australia, the government will pay a vendor within 5 days if the invoice is electronic via PEPL. Singapore is actually offering cash grants for businesses that adopt this because they see it as a real way of digitalizing the economy and really driving process efficiencies amongst businesses. I'm going to talk about VAT in the digital age in a minute, but we're also seeing the increased use of QR codes. So Switzerland last year mandated QR codes on the invoice for payment details. Portugal has a requirement to have a QR code. That QR code has the identity number of the certified billing software that's been used. It has other tax sensitive information. It's also a requirement in Saudi Arabia, and it will be in Spain. And the interesting thing there is it's providing consumers with the opportunity to scan that QR code, to validate it, report data to the tax authorities in some instances, or at least validate that tax has been paid. And some countries are actually incentivizing consumers to do that. So in Portugal, you can actually join the tax lottery, win a car or money, by scanning the QR codes. We're also seeing, of course, the trend of mandatory e-invoicing. I'm currently tracking about 86 different countries who have introduced e-invoicing or about to, and they're all looking to apply these continuous transaction controls, embedding controls at every stage, either at the point of sale when the invoice is raised, all the way through to running checks, AI, machine learning on that data. I think we're going to move to greater harmonization around the globe. It's been a bit of a Wild West till now. Most countries bringing in their own requirements, their own formats, their own platforms. That, again, has made it very difficult for businesses to look at this holistically, strategically. And they've really gone for a band-aid approach, maybe looking for a local band-aid approach, using a local vendor, a local software solution, or maybe even just outsourcing the problem. And then we're also seeing a trend around e-reporting. So, while there may not be a requirement to issue an invoice electronically to a consumer, B2C, more and more countries are saying we want that data too. So that may be periodic reporting of that data via the same e-invoicing platform, or in some countries it's fiscalization, the point of sale solutions, the checkout tills in retail stores. That data is recorded then and submitted to the government in real time. So I'm now going to look at VAT in the digital age, or as it's recently known as VIDA. And this is huge, once in a generation reform within Europe. And the aims are to digitalize the economy, as well as break down a lot of the barriers that exist now for countries and businesses adopting and promoting e-invoicing. So the first change is the definition of an e-invoice in the VAT directive will change. It used to have a very broad definition, any electronic format. So some countries and a lot of businesses thought, well, that includes a PDF. I can just use a normal PDF and issue that and receive that from my suppliers and customers. When this change goes through, and that's in a year's time, an e-invoice will only involve structured data. So a typical PDF will no longer qualify. So really you're looking at XML, UBL, CII, maybe even hybrid PDFs, the A3 documents that are both human readable, but also have embedded code. And this is the big headline. It's caught a lot of people by surprise. The European Commission is going to mandate e-invoicing for all business-to-business supplies cross-border within the European Union. So wherever goods are sent from one European country to another, or services are provided cross-border within the EU, the invoice needs to be electronic. And based on that prior legislative change, that invoice will need to be in structured data, so no longer a standard PDF. And this will apply to every single business in the EU, regardless of whether the country has introduced e-invoicing locally, domestically. So this is going to be using the EU's European e-invoicing standard, EN 16931. There'll be no pre-clearance. I did say that was a trend, but the European Commission, want the invoices to flow. There is going to be reporting, and I'm going to talk about that in a minute. But the legislation also says that invoice needs to be raised within 2 working days of the time of supply. And the time of supply is typically, when the transaction takes place. So we will suddenly see an end of summary invoices where a business can wait till the end of the month to raise an invoice. Suddenly, it needs to follow the transaction. It needs to be in real time. That document needs to be electronic. And I'm going to talk about it in a minute. There's going to be real-time reporting of that invoice too. We're going to see a lot of the barriers removed. So currently a buyer needs to agree to receive an e-invoice because maybe they don't have the systems, the technology, the process, or the sophistication to be able to receive an e-invoice, something in XML. This so-called buyer consent rule is going to be removed. So a supplier, a business, maybe a large enterprise, looking to adopt e-invoicing for, wider business financial process benefits, they'll be able to do this unilaterally, without the agreement of the buyer. And then a similar thing at a country level, at the moment where a European country wants to mandate e-invoicing, it can't without special permission. It normally has to go through a very strict legal process and needs to request a derogation formally from the European Commission. There's normally, we're introducing this for a set time limit to counter fraud as an emergency measure. That's how Poland, France, Italy all introduced e-invoicing. But going forward, that requirement will disappear. So really opening the floodgates, for businesses and countries to adopt e-invoicing. But I would say, the date on this, is kind of irrelevant because countries are not going to wait for the starting gun. And in fact, just in the last 2 weeks, Germany has requested permission to introduce e-invoicing on a mandatory basis in the country. So that's going to be based on these new European requirements, but it kind of shows the countries that are eager to do this. We're probably going to see more harmonization. As I said before, e-invoicing can be a Wild West, with different formats and standards. But the European Union is very keen to promote its EN 16931, its regional invoicing standard. So this was created for business to government, but it's going to be scaled. It's going to be introduced across the board. So this will be the standard for cross-border invoicing within Europe, but also there'll be a change to say any country that has an e-invoicing system, okay, you may have other formats, you have to allow businesses to use the standard. So finally, businesses can adopt a single scalable strategic solution to meet this. I'm not going to go into all the technical details. You'll see that on the screen now. One thing I would say is PEPL, which I mentioned before, the PEPL network and standard, that actually implements this European standard. So if you use PEPL, you're already compliant with this. And the PEPL network may be a very logical choice for businesses going forward. And so why is Europe introducing mandatory e-invoicing cross-border? Well, it's to facilitate real-time digital reporting. So in real time or close to real time, both the supplier and the customer will need to report the invoice data to their local tax authority. So both in the country where the goods are being shipped from or the services are being provided from, and then the recipient's country. That will lead to a reduction in some compliance filings. So the EC sales list will ultimately disappear within the EU. But this data will then be shared at a pan-European level in this new central VES system. And in the current Wild West, loads of different digital reporting requirements in every country. Spain has the SII, Hungary has real-time reporting. In the short term, these countries will have to ensure interoperability with this new digital reporting requirements before fully converging to the full requirements. So here's a quick summary. I just wanted to compare today and tomorrow, where we are today, the general picture within Europe, and tomorrow under VIDA. So VIDA is still in draft. It needs to be adopted. It needs to be approved by the European Council, which is every single European country. It needs unanimous support. But there's a lot of work has gone into this. So, we think it will be passed soon. So I won't go through this line by line, but buyer consent disappearing in the future, suppliers will be able to raise invoices as they like. Paper and e-invoices have parity at the moment under European law. But in the future, it will be e-invoicing that's mandatory for intra-community, and member states will be able to introduce e-invoicing domestically without obtaining permission first, as long as they meet the requirements. So no pre-clearance and using the European e-invoicing standard. So I now wanted to have a quick look at something France and Germany are doing. So France is mandating e-invoicing from July 2024. Germany has requested permission to, but without a firm timeline yet. But the two countries have actually got together, collaborated, and created an international standard, a document that is acceptable both sides of the border in France and Germany. So in France, it's called the Factor X. In Germany, it's called the Zugferd. And not only can it be used in both countries, but it's a human readable PDF, but with embedded XML. So this will likely meet those new European requirements that it needs to have structured data. But it's very close to business as usual today, because I talked about the inability of someone sitting within an AP function, a shared service center, not being able to read an XML. But if they had this hybrid document, for me, that's close to business as usual. You have the benefits of the embedded XML. It's still an e-invoice, but at the same time, someone can read it, understand it, print it, and share it. So it'll be interesting if this becomes the popular choice in France, because it is one of the 3 acceptable formats that will be allowed. So in terms of opportunities for the tax function, suddenly the business has the same data as the tax authorities, really new, rich, clean, granular data. And there's no reason why businesses can't run the same checks that the tax authorities will, running analytics, running visualization tools, using it to scrutinize the data, the company's tax policy and processes, really getting the same insights into the business and into the tax function that the tax authorities have themselves. And it's my view that, tax directors, VPs of tax suddenly become these key holders, the gatekeepers of these insights, improved management reporting, improved visibility over procurement patterns, sales, really looking at, where customers are, what they're buying, where could there be procurement efficiencies. And this will help the tax function become more strategic, spending less time on, quite boring manual compliance tasks, and being able to focus on more strategic activities and really business partnering with the C-suite and really taking a lead strategic role. And then there's the cost element. I mentioned before there are savings. I wanted to finish with this quote from the French government. So when they rolled out their plans for e-invoicing, this is one of the examples they gave. And they said, the price of an e-invoice is less than the postage stamp. The price of a paper invoice is more than 10 euros. So, the savings just even on a per invoice basis can be huge. So of course, any finance transformation, investment in technology, training, changes to process do come with upfront costs. But going forward, as well as, the tax stick and the mandates, if e-invoice is embraced, there are clear business benefits, and this really can improve the bottom line. So I'm now going to move over to questions. Michael, I'm just going to open some up now.
Excellent. Thank you, Alex. Okay. Are you ready for your next question?
Yeah, so I see there's a question. Who is responsible for the security of these government mandated systems and the massive amounts of info? Very good question. It's very topical within Europe at the moment. There are a lot of concerns from EU member states about GDPR, sharing of data, and sharing of personal data. So, that is one of the reasons why data is going to be collected within the EU in a decentralized model and then aggregated up. The government are ultimately responsible, but they are beginning to embed, their own local cybersecurity rules. So in France, they have the SecNum Cloud, which is their strict cybersecurity requirements. And to become an e-invoicing certified provider there, you need to prove that you meet those SecNum Cloud requirements. Similarly, within PEPL, there are ISO security standards that need to be met. That's more on the side of the suppliers, the service providers, the e-invoice software companies. But my understanding is the governments are trying to embed the relevant security and protocols in their own platforms. Where does the USA sit in the adoption of e-invoicing? Another great question. Well, most of this presentation has been about tax and how tax is the real driver for the adoption of e-invoicing by governments. And the issue in the US is there isn't a federal VAT. Of course, sales tax is levied at a state and local level. So I think it's very difficult for tax to be the driver of that because there isn't that federal VAT. There are also issues around, government and states and intra state commerce. So an e-invoicing mandate would probably be very difficult to get off the ground. That said, there is currently a federal e-invoicing framework pilot. This is called the Market Pilot. It's being run by the BPC, the Business Payment Coalition, and the Federal Reserve Bank of Minneapolis. We're in the final stage of the pilot. I think there's about 90 odd businesses involved in this. It's been a success. They've defined an e-invoicing framework, a US kind of American e-invoicing standard, and they're now building the technology with various members of this pilot to exchange invoices in a secure fashion. That e-invoicing pilot will move to a live system, framework, production next year, probably April 2023. And I think we'll start seeing more and more businesses join that, particularly as larger enterprises join it, and then maybe put pressure or incentivize, their customers, their vendors to also join, so they can actually benefit from the business process and lower costs. And that won't be tax driven, but it's a great example of finance transformation. Are not-for-profits exempted from any of these regs? Typically, not. It tends to be, based on the transactions that are taking place. So if a not-for-profit is invoicing a business or a government, they're likely to be caught. Sometimes we do see mandates be staggered in terms of the size of the business. But what I always say to my customers and clients are, even if the headline says only the largest businesses need to raise an e-invoice on day one, that actually means that everyone needs to be in a position to receive an e-invoice on day one, because, of course, in terms of procurement on the purchase side, there will be large vendors. So everyone needs to be in a position to receive an invoice. And I think that is the last question. And Karen said, that's just too funny when VIDA translates to life. I think that's a great acronym, Viva la Vida.
And we do have a few more questions. Should I pitch you one or two in the last couple?
Yes, please. Yes, please.
Okay. Is there no minimum company size or gross for receipts threshold in countries who've mandated this? It seems a bit prohibitive for starting a business. What do you think?
Typically on the receipt side, no. This is typically any thresholds are on the sending side. So just as I said before, that normally means that every business straight off the bat, when a mandate starts, needs to be in a position to receive e-invoices. So they may have extra time to do business as usual on the AR side, paper, PDFs. But if they have larger vendors who are caught by this, they will have to be able to receive it. They'll be able to process it, and just put that as part of its business as usual finance process.
Excellent, thank you. Let's see, we've got another one here. Similar to the question now being responded to, how are roles like the NYS Shield Act covered?
I'm afraid I'm not familiar with that legislation. Dennis, I'm more than happy to, maybe discuss that offline. Once I just refresh myself on that legislation.
No problem at all. So we're winding down with our time. And do you have any final thoughts before we close it up?
I suppose, this is now such a key trend. It's not a case of if a country will mandate this, it's when. So, if you're a US corporation, you have a global footprint, this will be affecting you somehow. So I'd say it's time to look at this strategically now, start to look to invest in a single solution platform, own a single process and strategy for this, because it really affects business and finance processes and can't be ignored. But I hope you found this useful, and it's been a pleasure to be able to speak to you today.
Thank you, Alex. This was a wonderful, super insightful session. We appreciate you so much. Well, that concludes today's webinar, and I want to thank everyone for joining us today for this fantastic virtual event. And thank you again to our partner, Avalara. Enjoy the rest of your day. Alex, thank you so much.
Thanks, everyone.